Hi, good afternoon, everyone. Welcome to our digital assets update for 4Q24 webinar. This webinar we'll be discussing about the most recent updates in crypto markets after the US elections. We'll just give another 2 minutes for participants to join in, and we'll get started. So for today, we have Radhika and also who will be covering CBDCs and the most recent developments on the front. So just as an update, we have just released our publication for the digital assets quarterly. You can find it on the web using this QR code over here. So feel free to go ahead and download the PDF report where you can find all the information with regards to our views on US potential policy changes after Trump, on top of some additional topics that we're covering today related to the use of cryptos for decentralized prediction markets and what do they mean for the future of market making, and also a topic on how inherently limited blockchains are relative to traditional financial markets, and how is that the case for cryptocurrencies, and why costs have been relatively expensive for transactions to happen on the blockchain. So with that, I will probably now officially kick off the webinar. So today we have three topics that we are covering. The first is the one that everyone is most excited about. What does the return of Trump means for US and potential changes in terms of the regulatory environment, in terms of the potential policy changes that could favor crypto markets. So we know that Trump has previously depended a lot on funding from the crypto lobby groups, and potentially that means that he's more open towards allowing some degree of easing in regulations, such as to reward his supporters in a way. We'll also be discussing prediction markets, and Radhika Rao will round off with CBDC updates. So just at the start, let's have an understanding of how crypto markets have performed since election of Trump. So if you look at the returns of various asset prices since 6 November 8 a.m. when the results first begin to stream in, you could see how all the Trump trades have performed. So at the top of the list is Bitcoin. It returned about 32% and basically outweighs all the other returns in the other Trump trades, whether it be in US equities, which are only up about 1.3%, or the US dollar, which is up by 2.5% approximately, or even US Treasury yields, where there's a lot of concern about fiscal deficits becoming perhaps unsustainable. We see yields rising not just on a 2-year but also on a 10-year basis, up by 10 to 20 basis points, steepening yield curve. And also there's a lot of concern about tariffs potentially introduced in China. So the RMB has weakened a bit. Hang Seng Index has also fallen a lot in this context. But by and large, the best returns, if you know Trump is going to win, would have been overwhelmingly in the cryptocurrency space, being long on Bitcoin as well as Ether. So if you look at just the monthly returns of Bitcoin and Ether and compare them against how the S&P 500 and Gold have performed, they are just basically outweighs any kind of return performance across equities as well as across traditional havens such as gold. So Bitcoin and Ether, they're up about 20%, 28.54% on a monthly basis, 26% for Ether. And if you look at it on a year-to-date basis, it's even more astounding, the performance gap between Bitcoin compared to traditional assets is up by 114%. Even Ether, which has not done as well because of issues related to supply, they have still managed to outperform essentially all the traditional assets. On a 1-year horizon or a 5-year horizon, the performance profile of both cryptocurrencies has been very strong. So what have got markets so excited about crypto in this period of time? So if you look at how flows have into the Bitcoin ETFs they have been very, very strong. In fact, we have seen more than 6 consecutive days of ETF inflows into US Bitcoin ETFs since Trump's election win. That's basically a record high in terms of daily ETF inflows, and that's also propelling, I would say, the price of Bitcoin moving from just under 70,000, where it's been range bound for a period of time since the Bitcoin halving event, to now being well above 90,000. So there's a lot of enthusiasm, a lot of excitement over how the cryptocurrency landscape is going to change with the Trump presidency. If you look at just on market cap basis, both Bitcoin and Ether, their market cap has well exceeded the previous peaks set back in earlier this year. They're now standing at well over 2 trillion US dollars. It's pretty much the same for prices. For Bitcoin, well above its record highs. For Ether, they're still a little bit below the peak set in 2021, but by and large, the returns have still been very strong, even compared to Bitcoin. So the excitement, is it justified, right, by the potential shifts that are coming in the US? So let's recap what Trump actually has said about crypto in the past. He said that he wants the US to be crypto capital of the planet. What does that mean? That means probably a lot more relaxation, a lot more encouragement of innovation of crypto services, of crypto-based services, not just in trading, investment, but in terms of innovation and also trying to find new applications for crypto. So from that point of view, what does he want to do? So he could be, firstly, he has promised to create a strategic national Bitcoin reserve. So we will talk a little bit about that. And he also wants to appoint a new leader at the SEC. So the current leader, Gary Gensler, he has favored a relatively strict regulatory interpretation. So what that meant has been there's been many litigation against crypto firms for providing security-like services based on the fact that there are many projects that have some kind of cash flows and could potentially be interpreted as some kind of securities. But all that could be changing with the Republican sweep of the US Congress, as well as the with Trump presidency. Perhaps we could see two things changing. The first is that a Republican senator has proposed a Bitcoin Act, which would go about creating and funding this strategic national Bitcoin reserve that Trump has mentioned. What's in the act? First, the US will refrain for selling any Bitcoin that it holds or it could hold in the future. So that probably means a withdrawal supply of about 200,000 coins. So that's a rather large supply that's going to be held by the US if this legislation indeed comes to pass. But not only that, there's provisions for the US Treasury to purchase up to 1 million Bitcoins and no more than 200k coins a year over the next 5 years. And 1 million Bitcoins is around 5% of total lifetime supply of Bitcoin. So that's a very huge amount of potential supply that will be taken off by the market, by the US Treasury, if this legislation comes through. Is there a possibility of something like this happening? I would say there's a chance. We have seen recent news that the Pennsylvania State Congress is looking at passing a bill where they will allocate 10% of the state's, Pennsylvania state's reserves into Bitcoin, and that's probably about 7,000 coins that they could purchase based on that legislation alone. So who knows, if the US really goes down this path, in terms of giving official recognition of Bitcoin as a reserve asset, then we could see very significant institutional participation, very significant buying activity in order to position for this change in the crypto landscape. The second bit is related to regulation. There's the FIT 21 Act, which was passed by the House back in May. We have discussed that in previous webinars. So essentially, the basic idea is to classify digital assets, those that are based on decentralized blockchains, as commodities rather than securities. So that means that the regulatory approach will be very different. It will be managed by the CFTC rather than SEC, and perhaps the less stringent regulations, if digital assets are managed as commodities, would firstly be helpful in terms of fostering more services, more institutional participation, as well as encouraging further experimentation and innovation in the cryptocurrency space. The second bit is that, of course, litigation risk will fall dramatically if that's the case. So that's probably going to be another boost for crypto link innovation as well as adoption in the ecosystem. The second point is that Bitcoin's status as a US reserve asset has some legal implications as well. So if it is indeed passed and the US Treasury is to hold Bitcoin as a reserve asset, then what that means is that we could see a more relaxed accounting treatment for not just financial institutions, but also for corporates in terms of holding Bitcoin. So we know that the capital charges for financial institutions to hold Bitcoin are rather onerous at this point in time. And that's because there's a lot of concern over risks related to digital assets. But if Bitcoin is given due recognition as a reserve asset, then there's a chance that these capital charges on top of could be eased to some extent. And we could also see more US corporate treasuries looking to hold Bitcoin as reserves. So we know Tesla has previously decided to invest some of their cash holdings in Bitcoin at the behest of Elon Musk. But and MicroStrategy has been another US listed company that has been buying out Bitcoin. But there has been actions also across a number of US corporates. So for instance, Microsoft will be holding a shareholder vote to decide whether or not they will allow their treasury to purchase Bitcoin. And although the board has advised against it, there's a chance that it could happen. So any recognition by the government in terms of conferring some reserve asset status on Bitcoin, I think that would have serious implications that will probably propel Bitcoin momentum pretty much across, not just in the US corporates, not just across financial institutions, but also even across other countries who tend to follow the US in terms of market practices. So the last point is that we could see an expansion of crypto services offerings, right, by traditional financial institutions. And that's really helpful in terms of increasing Bitcoin adoption. So at this stage, I think it's kind of interesting to see how crypto can feature in relations to fiat currencies, in relations to gold, given that crypto has been called both a digital gold as well as a digital currency. So if you think about it, the fiat currencies, they tend to be more predominantly used in payments, in day-to-day transactions. And for the US dollar in particular, it is actually a very important reserve asset for many other countries. The same can be said for gold as a reserve asset, given its traditional role as a store of value. And over time, we've seen gold holding out its value pretty well through ups and downs in markets, through a lot of volatility. So these two assets have pretty well-defined rules. For crypto, it's very much a new invention that was developed over the last 15 years or so. Initially, it was proposed to be used more in payments. And indeed, that has continued to be one of the use cases in decentralized financial applications. But there's also a focus on the fact that it has limited supply. So that's offering some level of insurance against inflation. We've seen it, crypto asset class actually performing quite well during period of high inflation in 2021. So what does it mean if crypto is actually to become a reserve assets, right? So it has not been officially recognized as such. There's still some degree of hesitancy on the point of traditional asset managers in making allocations towards crypto. So if we see a shift towards it being recognized as a reserve asset, that would, I think, potentially makes crypto a very interesting asset class, not just for investors, but also in terms of propelling more adoption, more usage of crypto in the marketplace. So one of the reasons why Bitcoin has not been as widely used, even though it's been around for well over 15 years by now, is that actually there are a few hurdles to its adoption, right? The first hurdle is that based on a survey by Pew Research Center, about 63% of Americans they lack confidence in investing, trading, and using cryptocurrencies. And really, who can blame them? Because we have heard so many news of cryptocurrency exchange failures in the past few years. We have heard news of poor security practices leading to hacks and thefts of bitcoins. So naturally, there's a lot of aversion towards participating in the crypto ecosystem because of this lack of confidence. But if the legislative environment is to change, if Bitcoin becomes more widely adopted by institutions, we could see a lot more accessibility to Bitcoin in terms of new platforms and new services offerings from the industry. And that's probably going to be likely to bolster the adoption of Bitcoin across the US public at large. A second factor for Bitcoin's lack of adoption, particularly in the case of making contracts, right? So is that Bitcoin prices are quite volatile and quite random. So the volatility of Bitcoin is about 4 times that of the US S&P 500. And based on the statistical tests that we conducted, we also know Bitcoin prices are effectively a random walk. There's not much predictability to be had in them. And that's also one of the reasons why Tesla initially has accepted Bitcoin as a payments channel, but now has stepped away from doing so because it's not clear how much are you getting for the Bitcoin. Are you getting 30,000, 60,000, 90,000? So that randomness in prices means that probably for more crypto applications to take root, you will still need to see stable coins, which are linked to the value of the US dollars for long-lived investments, as well as any kind of long-term contracts. So that pretty much sums up our coverage of the US policy change. But now I think with the end of elections, it's quite interesting to look at what happened in the prediction markets in the run-up to elections and what that could mean for traditional financial markets as well. So this chart over here shows that shows the odds of a Trump presidency price in poly markets versus Kalshi. So poly markets is a decentralized prediction market based on cryptocurrencies. Whereas Kalshi is a traditional centralized exchange for events, pricing of events and outcomes. So what we observe is that in the run-up to Trump's election victory, poly market gave a consistently more accurate pricing of Trump stocks than Kalshi. So even though the trajectory, the change is quite similar, but from a level perspective, we can see poly market being a lot more accurate. And it has also become the breakout platform in this election cycle with over $1 billion of transactions that were made going to elections as compared to Kalshi, where it's probably less than $200 million worth of transaction volume. So what has given decentralized prediction markets such a good advantage in terms of prediction, in terms of gathering trading volume, and to some extent you could argue that the fact that it's decentralized means there's not a lot of regulation, so and there's also the benefit of anonymity. So both are factors that could have in some way encouraged more participation, more trading in the decentralized markets compared to centralized prediction markets. So disadvantages are significant in certain ways because also the fact that regulation means that US-based residents are not able to participate in terms of making bets on election outcomes. So we also seen the fact that poly market user base have jumped rather dramatically going to elections. It was under about 50,000 monthly active users at the start of the year, and now monthly active users has climbed to over 220,000. So participation is very rich. Markets are very deep given the trading volume of over $1 billion. So by and large, it shows that decentralized markets have a lot of momentum going into elections. So could we generalize this to say that, maybe all financial markets should be heading towards this direction? Decentralization based on the blockchain. We'll discuss that in subsequent slide. But for now, we'll make the case that prediction markets are actually a very important use case for crypto. Firstly, the predictions are not just limited to elections. Of course, a lot of attention is on elections because of this this time of the year, but really any kind of event outcome could be priced in prediction markets. The highest trading volumes that we've seen in this market so far are for sports results and pop culture related events such as which movie is likely to be highest grossing for this year and so on, so forth. But interestingly, researchers say that this kind of crowdsourced forecasts are pretty accurate and you can use them for public policy decision making and so forth. And the American Meteorological Society has also published research saying that prediction markets can be used in terms of predicting climates rather accurately. So that can be used in some ways, for instance, for hedging by agricultural producers, or if, for instance, there are major sporting events that depend on the weather, I think that could potentially provide another use case for hedging against such risks. So interestingly, crypto has occupied this very important niche in terms of promoting an expansion of, I would say, state contingent kind of predictions and event hedging that would be useful not just for society, but also in terms of ensuring that markets are complete and that there could be some efficient allocation of resources based on the completeness of these financial markets. And given the success of decentralized prediction markets, does that mean that we should blockchain everything? So the answer is no. So one interesting paper that came out in the Quarterly Journal of Economics, which is actually a top 5 journal in economics, is that Nakamoto's trust via blockchains, they are quite interesting because they offer a very different way of achieving a decentralized permissionless consensus without the use of traditional trust mechanisms. So you don't have to depend on the rule of law. You don't have to depend on reputations, on collateral or relationships. You just have to depend on the blockchain. But the problem is that this kind of Nakamoto trust is very expensive, right? So the cost to maintain the integrity of the blockchain against attacks is very high. So the relationship that Budish in his paper describes is pretty much a linear relationship. So the cost will scale linearly with the economic value of the blockchain itself. So how did he arrive at that? So there are two primary equations that he used. First is the zero profits condition, which is that the cost of supplying honest mining transactions should equal to the profit. And the second condition is the incentive compatibility condition, which is that the cost of staging an attack should not be able to exceed the value derived from the attack. So combining these two equations, he came out with an equilibrium constraint, which is shown over here. What's the constraint? So constraints basically say that the reward earned per block from mining or from staking should be proportionally higher than the value of the attack, which in this case, we could take it as the value of the cryptocurrency network itself. And basically, this relationship say that there's a linear relation. So the more powerful, the more economically useful your network is, the more you're going to have to spend to incentivize miners to basically maintain the network. So that's why in Bitcoin's earliest days, you could actually see use laptops to engage in profitable mining. But today, you will have to require dedicated, specialized hardware, very expensive hardware, just to be able to do profitable mining. And that's in contrast to traditional trust mechanism, where usually it's a paid out fixed cost, such as rule of law. You just have to set up costs for enforcement, and they basically have zero marginal cost for new transactions, so on and so forth. So it's very clear there's still a role for traditional centralized markets because they are much more efficient given the traditional trust mechanisms, and the role of financial intermediaries will likely still be present. We're not going to completely be decentralized. Blockchain is not going to eat the world. So that's a very interesting paper that we're covering today. So with that, I'll hand over the slides to Radhika, who will provide our cryptocurrency CBDC updates.
Thank you so much, Wei Liang. Hi, everyone. So let me carry on with what Wei Liang left with. So CBDCs, essentially central bank digital currencies. A lot more action happening that place, but I do think that the takeoff rate is going to be still quite moderate, given that the policy makers around the world have quite a few questions, as and when whether to actually fully roll out the facility or not. In the first slide, we've just taken a status check. Let us go to the next slide, please. So in terms of how many countries have adopted, and this interestingly continues to grow. More and more countries are keen to at least set the ball rolling in terms of exploring a CBDC. Now, exploring, of course, can be done in various ways. You can conduct just discussion papers, try and get some views from the public, liaise with some of your onshore research institutes. In some cases, if you've managed to get past all of that, then consider pilot runs as well. And we have seen that being done more and more countries. In fact, every time the survey there's an update, you see more countries having jumped into the fray. Now, in terms of the G20 countries, you are actually seeing that there are quite a few. There's 13 already in the pilot stage, including some of the countries like Brazil, Japan, and India. You also seen some of the crucial, so that some of those countries also fall under the BRIC umbrella. Again, Brazil, Russia, India, and China. You have seen them also participate in this, or at least start exploring, studying about a CBDC. But interestingly, the BRIC community, which is growing now, it also comes at a time when there is this heated discussion on potential de-dollarization, whether CBDCs could provide and emerge as an alternate payment system to the dollar, given that it's electronic, digital, and interoperability, cross-payment movement is much easier because of that. There's not enough evidence to suggest that this does provide for that, for de-dollarization, or rather supports de-dollarization. But these are, again, a few of the discussion points that are surrounding this particular area. And then, of course, China is perhaps still the front runner in this space, having done a lot more in terms of development, and also piloted a transaction across different provinces, and in terms of retail, in terms of even making payment as a e-salary, so on and so forth. So different countries, different pace, but I think the biggest takeaway is that more and more countries are open, so they don't want to be by the sideline, not consider this option at all. I think among the major countries, I would think United States is one which has, at least on the CBDC front, decided to go very slow. They might be active on the crypto side, but insofar as public currencies are concerned, they would prefer to wait and see. Quite a lot of, you know, I would say headwinds in terms of the government and the officials. And of course, now there's a change in administration. We'll have to wait and see if they take it any further. But I think as of now, they have chosen to go very slow. In the next slide, I've just highlighted 3-4 big sections that we discuss about in the paper. The IMF, of course, has been very active in this space in terms of conducting research. The whole idea for IMF's approach is to guide and support global policymakers in their exploration process. So they have done capacity development, they've done some surveillance work, and through the past couple of years, they have been releasing a set of virtual papers. And in the second such tranche, they had released the Central Bank Digital Currency Progress and Considerations paper. So that set the ball rolling on the second tranche of virtual chapters, which are already released earlier this quarter. All of this is available on their website, but what you see is this basically papers look to address some of the analytical and operational questions around CBDCs. A whole lot of questions, things like, what are the advantages, or how do you position CBDCs against existing wallets, right? You got fast payment networks. What about cyber risks? How do you leverage this data while you're trying to preserve privacy? So many questions that are still, because this whole piece is still taking shape. There are only 3 countries that have rolled it out, and the rest are still in exploration stage. So a whole lot of questions still around what this option means and what it means for policymakers in general. I have like a couple of lines on what the 2 of the virtual papers that were highlighted. I think one of them is how do you position CBDCs against existing fast payment systems? Overall, there are similar efficiency, and those, especially in the retail CBDC side, the other private wallets are still very, very well entrenched. So is there any added benefit, and how does CBDC really add to that whole space landscape? I think the main distinguishing factor is that it's public money. These are not wallets, these are just money, but in a virtual form. So I think that is be the biggest takeaway. Obviously, if you design and implement the CBDC properly, that would allow a lot more interoperability as well. And I think that will, in the interim, until a potential rollout, if any, you are going to see a lot more development and R&D happen in this space. In contrast to private wallets, obviously the central bank is likely to be the owner, where the private wallets are usually floated by private sector players. In this case, the central bank will be the owner of the infrastructure. And if there's any other partnership that it wants to have, it will be perhaps G2G, trying to rope in other governments, especially for cross-border transactions, and as well as private sector players if we want to do it domestically as well. And again, many questions surrounding this space, but I think if you consider financial inclusion and efficiency, obviously CBDC is a public good, right? Unlike wallets where they would look at some profit incentives or to make profit. But if for CBDCs, these are all supposed to be public good without an underlying profit objective. So the final goal would be to reach those parts of the population that is underserved or underbanked. That's another undercurrent which differ or it differs this from the private wallets or e-payment services. So obviously these papers are very long. I've just taken the essence of the paper. The other one that you've seen is about cyber risks. And certainly, when you talk about cyber security, you need a lot of underlying principles about confidentiality, integrity, and availability. The system needs to be accessible, usable as in when you require 365 days, 24/7. So these will be, again, very important when you consider cybersecurity, as well as higher usage. And insofar as cyber risk, I mean, all of us have, come in touch with this technology in various fashions, especially when data is considered. And cyber risks have a very unique set of features, and you can't approach and treat it the same way that traditional operational risk frameworks are considered, right? So there needs to be a lot more thought report into the cyber part of the operationalizing CBDCs, for instance. And when you talk about, again, interplay of AI into all of this, what it does is that central banks have been using tools, the machine learning, deep learning, NLP, for a very long time to reduce unauthorized access. However, it's a double-edged sword, right? Because as AI is getting evolved, you also have kind of lower barriers of entry for cyber attackers. So again, knowledge can expand not only from the central bank's perspective, policymakers' perspective, but from the users' perspective as well. And given that it's a complex infrastructure, you've got a lot more intermediaries. You've got the financial market infrastructure itself. So again, cyber risk is something that's going to be a risk visited again and again. So that will require the entire architecture to be much more stronger, much more risk-proof. Then on the country side, obviously we have got China. And what you see is that I've spoken about other countries. I won't go into too many details, but I think some of the countries that we are talking about, China, like I've mentioned in the last slide, it's certainly one of the most developed in the CBDC space. They've run a lot of pilots. Now they're also considering some cross-border payments with Saudi Arabia, so to explore if there could be alternate uses of the digital yuan. As of July of this year, about 180 million personal wallet users have considered CBDCs. There's been I think compared to same time last year, there's, I think, a fourfold increase in terms of number of transactions. So certainly gaining traction. But despite this very strong performance, there is, somewhere speculation that the domestic usage is kind of flatlining. And again, this has got to do with the fact that on the RCBDC side, which is a retail CBDC side, it's already very, very well advanced and entrenched in China. So additionally, things like, retail merchants, merchants are not incentivized. Intermediaries such as payment institutions are not incentivized. So none of them really need to or see the need to push for higher usage of EU1. So these things put together, while it's growing fast, I think the take-up has not really been, extremely sharp. Beyond the policymakers' push, there doesn't seem to be that much of impetus in the system to expand it more than current usage. When other countries, I will take RBA, that's the Reserve Bank of Australia, as an example. Again, they are in a study phase. RBA and the Treasury in the country had released a report just, I think, a couple of months back, summarizing developments and setting out a 3-year roadmap. Again, they don't see a big case for retail CBDC, but perhaps WCBDC, which is the wholesale CBDC, might be able to gain better traction. And finally, on the Indian Central Bank, which has also run CBDCs in the past, as a pilot studies in the past, has attracted about 5 million users and about 2.5 dozen participating banks. More importantly, India is also looking at doing offline and programmability functions into the CBDC. Again, the idea being financial inclusion is one of the areas where they would like a lot more real-time gains. I think then the final one is BIS. A very quick line on it. BIS Innovation Hub has been very, very active in collaborating with various regional central banks. But the news that hit the wires is that it's exited the cross-border payments platform, Project mBridge, which it had developed with China, Hong Kong, Thailand, and UAE in 2021. Saudi Arabia joined this initiative in mid of this year. So BIS basically has mentioned that I think the stakeholders can take it forward. It's gone to a stage where there is likely to be gains which are already inherent. That said, they've also mentioned that it's not reached a stage where it can be completely operationalized. So a lot more development is still required, but they don't need to be a part of it. I think they see themselves as an actor of providing that initial impetus, initial knowledge bank, and thereafter allowing the other stakeholders to take it forward. I think that's all from my end. Thank you very much. I will perhaps read some of the questions that has come our way. Would you like me to do that, William?
Actually, I can see some of the questions,
Oh,
so
you can. Okay, that's great.
so
Yeah.
perhaps you can ask other questions after that. So actually, I think it's quite interesting your CBDC segment because we know that the typical cryptocurrencies, they're effectively trustless, right? So they're not based on any kind of trust between anybody. There's no governments, no central parties. But for CBDCs, actually, it is a central bank currency. It is backed by the full power, full authority of governments or central banks, and that perhaps give it a lot more scope for efficiency as well. And I think you mentioned that the RBI has conducted a pilot exercise for retail CBDCs. So I read a little bit of the speech by Governor Das. So he mentioned that CBDCs could be used for the rural community in terms of distribution of carbon credits and so on and so forth. So perhaps will be able to give us some idea of what's next for the RBI on their journey towards a retail CBDC.
Sure. I think the idea for RBI, as many of the other central banks, was also not to sit by the sidelines, right? So they have taken an active interest in wanting to study, study proof of proof studies on this initiative. If they need to do to establish an architecture, how would they go about it? So they named a few intermediary banks that they would like to work with, and they were running some pilot studies at a very, I would think, at a very early stage, just say within the eating facility in one of the corporates, and trying to see if that functions very well. Again, these are just e-currencies, right? So it's a digital currency, so it's easier to move on to that framework. It did gain a bit of traction. I do remember there was even ads in the newspaper, local newspaper, asking people to try this initiative out. There was a few steps mentioned, so just to get enough volume to conduct this entire pilot study. This exercise is said to have covered about, like I said, about 5 million users and about 16 banks. So it was fairly, wide, but obviously considered, if you compare it to the population of the country, it wasn't much at all. Coming to your bit on real case uses, yeah, I think one of them was, like you rightly mentioned, give purpose-bound money to the beneficiary, right? So this, I don't know, at some point, India does something called the DBT, basically direct benefit transfers. It gives subsidies. They have basically used digital modes to get it to the final beneficiary directly to their bank accounts. One never knows, right? You could program it such that it could go to the beneficiary known in e-currency, and be time bound, that you need to, utilize it fast or it expires thereafter. I'm just, thinking aloud. So the function of being programmable is the most interesting. Again, the idea is to prevent leakages, make sure that the beneficiaries get it the most. So these are some of the ideas behind why they even want to explore this option. That said, I think it's fairly clear that they're in no rush. So I think a system-wide CBDC remains out of question for the time being. They just want to explore, keep things ready. At some point, this framework takes off, then RBI will be will be ready with all the arsenal. But at this point, I think they just beyond comprehensive understanding, I don't think they want to get to a rollout or anything close to that as yet.
Right. Thanks so much, Radhika. That's interesting. So I'll take some of the other market questions that I've seen, and please feel free to ask any question that you have on the chat, which is available on the user interface for WebEx. So the first question that I'm seeing is that is there a relative value trade between mainstream cryptos and alternate coins? So that's very markets oriented. I think it's important to recognize the value of crypto comes from its network. So the mainstream cryptos, they have very deep, very liquid markets because the network is so extensive. They've been around for very long. And if you know Nassim Taleb, he's promulgating this concept of the Lindy effect. So the longer period of time that something exists, probably means that its lifetime, its expected lifetime is a lot larger, right? So we know that Bitcoin is the oldest cryptocurrency, and it has the longest period of existence so far, and by extension, it should probably have the longest lifetime. For alternate coins, is a bit harder to say whether the community will thrive or whether the community will continue to grow over time. Very difficult to say. So that's one factor that I think is not quite fair to compare altcoins, which are typically used for speculation, versus more mainstream cryptos, where there's a lot more institutional acceptance that these are bona fide assets that could be a form of digital gold. The second reason why I'm a bit more hesitant about altcoins is that they tend to be more prone to social media manipulation. So a lot of these project sponsors, they could be a lot more loud in terms of their proclamations of the projects, marketing, so on and so forth. And there's always a risk that there could be some degree of manipulation in terms of the opinion of their altcoins, and they also could hold significant stakes in terms of these projects as well, which give them a lot of leeway to actually to increase the supply of these altcoins in the market. So these are two reasons why altcoins, even though they have a lot more volatility, they need not be showing the same kind of performance returns as more mainstream coins, where we say investor acceptance is a lot higher, and also the fact is that market making, whether in terms of liquidity, whether in terms of market cap, they are just a lot more mature, a lot more developed. So the second question that I'm seeing is, aren't decentralized predictions markets biased because they are largely traded within the pro-Trump crypto community? Yes and no. They are biased, but they're biased towards the right direction. So first, of course, we know that the crypto bros, they are all very vocal in their support of Trump, right? And you could also, by extension, argue that community is more pro-Trump. But there was an interesting interview done with regards to a French man who made a bet on Polymarket for Trump's victory. And the reason he explains is that there has been an effect known as the shy Trump voter effect, where if you were to ask for their opinion of whether they will vote for Trump or not, they're not likely to give you a direct, honest reply on their voting preference. And what happens was that he conducted his own survey where he asked a different kind of question, whether do you think your neighbor is likely to vote for Trump? And in that case, that person, a shy Trump voter, will be more inclined to say yes if it's hidden voting preference for Trump. So he did that survey, and then he made that bet on Trump based on the results of the survey. So in a way, yes, there's a pro-Trump bias, but I would say that because huge money is at stake, right, billions and billions of dollars are placed in these prediction markets, it's not going to be a case that you're consistently going to see huge biases, right? You have to trust that the market is efficient, because if not, there's going to be scope for arbitrage. There's going to be scope for you to make easy money. And the other interesting case in point is that back in 2020, just before Biden's inauguration, there was actually still positive probability in Polymarket pricing that Trump is going to be president. And the reason was because there's a lot of allegations of voting irregularities. And in that case, what was clear was that you could actually have profited from that market because the results of the elections are known, but the market is showing a different price. Therefore, if you were to just enter in big size, you could make profit out of it. I think it's less likely to see this kind of scenario going forward in Polymarket and decentralized prediction markets now, because of the number of participants having grown so much compared to back in 2020, and the fact that so much money is at stake is very unlikely that you can have any kind of consistent biases that will offer profitable opportunities for other financial market participants to take advantage of. So that's my my take on that. So Radhika, do you have other questions that you're seeing on the chat?
No, I think we are largely done. Anyway, we'll
All
be
right.
running out of time soon as well.
So thank you, thank you so much for attending our webinar today. We hope it's an informative session, and we'll be continuing to provide our quarterly updates on digital assets. This will be our last digital assets webinar for this year. So see you in 2025. Thank you, everyone.
Thank you very much. Have a nice evening.